Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor 1914. Holla at your boy. Welcome to my SCHD video. Woo, 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 woo. I know, right? Uh, I was just looking at this one video by one of the investors. I look at Mr. Double, no, Mr. Double Compounder with cheese, and he finally switched over to investing to SCHD. He came over into the light. I know he was saying how, and when you invest into SCHD, you come into the SCHD community and basically the SCHD cult, and what I can say is with the SCHD, say what you want. Say what you want. What I can say with anything about with SCHD, say anything about investing. When you start to receive those small dividend checks, when you start investing and you're just starting out with just $500 or just $1,000 into SCHD, it's really nothing like to hype about, right? But when those dividend checks or when the amount starts to compound, then you're like, whoa. Give you an example. Right now, here is so you know that it's not hypocritical. I plan on buying 200 another $250 worth of SCHD on Monday. Hopefully, SCHD dips under $26 because I love buying SCHD under $26 because right now my cost basis is 27.30, meaning that when I was buying SCHD, I bought it at its top at the beginning of the year, and at the beginning of the year it was at like $28. During the span of March to April, when the market has been down, I've been buying it a lot under 25. So I've been buying it now around the 25, $26 range, which is the reason why how I'm able to get it under 28. So I'm bringing my cost basis down to the $25 range. Also, when it's in the $25 range as well, that's when the stock or the ETF dividend is around 4%. Get more bang for the buck. What you see with my portfolio, the top dogs in my portfolio is Broadcom at almost close to $15,000, Microsoft, which is close to $13,000, Kroger, which is it just finally hit $7 because I just received a dividend of $32, and now recently it's going to be SCHD. I'm I have my high flyers like Meta and everything else that falls between that pushes my portfolio up. But then I have SCHD as my stability ETF in my portfolio that's going to continue to rock with it to give me my dividend. So why am I going all in? Why you should go all in? Why we all are going all in? See what I did there? See what I did there? Ah, yeah. We all getting that money. We are getting that money. This is why. It's exciting. Let's peel back the onion some more. Let's peel back the onion. Yeah, go ahead and download for your boy. So next month, actually not this month, this month, because you get paid every 3 months, right? So this month's dividend, what I plan on receiving from my dividend stocks from March. March is a very pivotal, delicious month. Right here, I'm going to be receiving close to $65 in uh, dividend for SCHD, but it hasn't always been that big. What you'll see is that in regards to dividends, I can I can apply filters, and then I can do SCHD real quick. Boom, right? Wow. So I'm guessing I haven't received my first. Maybe that's why. Oh, okay. So from what it looks of it, looks like I'm going to receive my first SCHD dividend. Um, no, I looks like I've held SCHD way back in 2024, so I should have received some dividends, but it was just small. It's kind of hard to like this. It's kind of hard to distinguish which one is a dividend, which one is that I bought. Uh, but whatever, we'll go to my dividend data. So for the dividend that I plan on receiving for this month in June, it's gonna be roughly $65, and I can please just take my word for it. Before I bought all of these shares of SCHD, uh, my previous dividend was it was in the 40s. It was like $42, and so with these shares that I bought has up to $20. Now it's at $64. This $64 is just is let's say around at 65. So basically, I'm getting paid out roughly $260 on a year. I'm going to continue to buy SCHD. I'm going to up it so that when it's time for me to retire, I can have a ETF. This ETF alone paying me roughly on the low end $10,000 per year. On the high end, hopefully it's paying me $25,000 per year. It's a lofty goal. We can get there. I'm going to show you why not only me but other people like SCHD. So why people like SCHD. So one, the dividend yield right now is close to 4%. That's one. Two, the expense ratio of what uh, comes out of your pocket uh, is 0.06, which is nothing. On a 5 year on a 10-year basis, uh, the ETF will double your money. So unlike like the yield max and all this, that when you put your money in this, your money it will it's going to take a long time to uh to double because of the whole in regards to rate of return. But for a total return with the dividend in, if you reinvest your dividend, it helps. That helps. So you don't have to worry about your money, the NAV to erode, unlike the yield maxes and all the you know all the other ones, those cover calls, right? So that's another reason why people like it. And then the last piece of why people like, oh, the last piece why people like uh, SCHD is the dividend growth. The dividend growth is basically outside of 2023, 12% growth, that 13% growth, 10% growth, 17, 19, so on, right? So you have this dividend ETF that you imagine you got your money into uh, a bank account, savings account, and also SCHD, right? Now compare. You got $10,000. That $10,000, because this is yeah, yeah. So roughly, yeah. Let's take this perfect example. You have $10,000. You got $10,000 in your savings account, and you got $10,000 into SCHD. I just showed you that within 10 years, with 10 years, this ETF has produced 100% rate of return, right? So rule of 72. So 100% divided by 72. I mean, your money would have doubled. In a savings account, you're not even getting 1 or 3%, right? For SCHD, it's paying you right now. It's paying you a 3.97. That's around a 4% dividend. And if you held your money in this ETF for 10 years, that $10,000 on a minimum would have would be a minimum of 20,000 of just the share price appreciation, and then if you reinvest the dividends, it would be a lot more, right? Because then you are right here. The shares is buying more shares, and right here, what I'm planning on doing is this. I have roughly 275 shares. Here's the share price. I plan on contributing at least $2,000 into SCHD on a yearly basis. 12% dividend increase, a modest 5% share price appreciation. Boom. Okay, here's the math. I'm 36 years old. 30, 30 years from now, I'll be 66, right? If all I have to do is put $2,000 a year into SCHD, and by the time of retirement, and look, it can be 333,000 or 330,000. This ETF will pay me this on a yearly basis. Split it by 4. You pay me, whatever this divide by 4, right? But for me, I plan on retiring early. So what I plan on doing is by year 16, which for me it would be around 51, 52 years old. Hopefully by year 50 I retire, but about 52 years old, this was gonna pay me around $10,000 a year, right? But the thing is that how I'm going to juice this up is that this is this is what I'm doing right now. Then I have other stocks that I'm also buying, that I'm compounding, right? Like Kroger. Kroger is in the background compounding hard, hard. So when the market is down, I have consumer staples. Kroger, people are going to forever going to want to buy groceries, right? And I'm not selling my Kroger stock. I might buy Kroger stock, here and there. Next year, I plan on buying maybe $150 worth of Kroger per month to put some money into Kroger. But I'm never selling my Kroger stock. I'm not. I'm gonna let my Meta shares that I'm gonna be contributing Meta hit here and there, but boom, let my Meta shares let that just grow. I'm going to be buying here and there in my Tesla. Let my Tesla stop. I got VU, the SP 500 ETF. We contribute that, letting that grow. My Aflac, but let my Aflac compound on itself. I got some AbbVie. I got some Goldman Sachs. I got some conference systems, right? So I got stocks behind the scenes that are high flyers that I wanted to grow and compound. And imagine these stocks compounded for 10 years, 15 years, 20 years. Then the high flyers sell those and then put into SCHD. Now check this out real quick before I end the video. Real quick. At here, gonna roll it up. At year 15, year 16, when I'm 52 years old, this is $118,000. So the portfolio balance of in SCHD alone will be $118,000, paying $10,000. I'm pretty sure my Meta, my Amazon, whatever all those other ones will grow into about $118,000, right? Will have to do is sell another 118 or $150,000 worth of stock, put it into SCHD, and double this. So then now this would be about what 120. Now another 150. It'd be about 250. I'll be able to double my output of SCHD. Now this will be paying me $20,000, or what if I want to up it so that this is paying me at least $30,000, and then still have the other stocks in my portfolio: the Goldman Sachs, the Kroger, the Aflac, the AbbVie, compounding and growing, and those paying me large outputs, and still have other stocks in my portfolio growing massively because I still have the S&P 500 in my portfolio growing to anchor my portfolio, and I still got the high flyers to still grow at a faster pace. That's how I plan on living off SCHD, and that's how I plan on going all in. So make sure you like and subscribe to my channel. We going all in at SCHD. We're part of the SCHD Army. Colt, let's go.